I'm Greg Chen. I work at CGAP. I've done most of my career working in Asia. I presently am based in Washington, D.C., where I work on inclusive payment ecosystems and what we call digital finance frontiers, which is looking at the ways that digital is going to change the way people interact with their financial services. Well, I think the one that many of us speak about is really this very ubiquitous and widely available basic transactional account. And ideally this would be something all of us could have easy access to. Perhaps it should even be free. It's mostly not. But I can well imagine most of us valuing being able to make a payment easily or to receive a payment easily. We sometimes forget how painful it is for people who live in the cash economy to make payments. It requires physical travel, standing in lines, and those are pain points that we care a lot about removing. I think the second piece that I'm really excited about is how the user interface potentially of smartphones could really change how poor people are able to interact with their financial service provider in ways that they really can't over conventional phones. So those would be two of the things that I'm really excited about. I think the third thing is this rapid proliferation of digital data and what this says about clients and our ability to understand what their needs are, to find them, and to provide them appropriate products. Maybe I'll just mention very quickly three. One is I'll move away from texts to a graphical interface. So this could be quite powerful for people who don't like to read or count or do other things over conventional means. The second is that I might be able to navigate a menu more with a drag and drop or click on a screen that's in a way that is much more intuitive, so I could navigate my experience. And the third is to have the device feed back to me information and prompt me verbally, and that would be potentially quite powerful, because as we know, many illiterate people much prefer to interact orally with their service providers, and this provides an opportunity to explore whether that could be a game changer. We hold that it has great potential. It's happened in small ways. I would say because the most markets today for poor people and the illiterate, they use a very basic handset. So the commercial viability of a smartphone app has not actually gone to market. That said, we are looking very closely at Myanmar, which has not had cell phone penetration historically, is going through a very rapid telecoms revolution as a result of its reform. And there is a very early high rate of use of smartphones even among the illiterate and poor in Myanmar. And so we are wondering whether this is a country that might significantly leapfrog beyond the basic handset straight to an almost entirely smartphone-based market. And if you look at the numbers, by 2020, countries like India might have 60% of adults using smartphones, including many below or at the poverty line. Well, I hope it's going to be positive. I mean, it's certainly going to be transformational, and it opens up enormous possibilities that we did not have in the historical brick and mortar system, where you had to, every time you had to add staff and branch in order to move services out in closer physical proximity to where the clients are. So digital has a chance to remove all of that, but then we have to think about how to build in all the old protections and interaction with the clients when we don't have people and branches on the ground to interact with them directly. So to me, that's the central challenge. But in terms of an opportunity, we've not had an opportunity quite like this to massify responsible, maybe even just basic financial services to low-income people. I think the danger would be that we get it wrong and that we provide too much of what people don't need and we get it wrong. So that would be the danger we need to avoid. Well, clearly I think over-indebtedness can and should be avoided, and I think there are ways to do that. I think credit bureaus are important. You know, one of the things we see very early on with digital credit is that the amounts of credit are very small, and therefore we worry less about over-indebtedness. Now, inevitably there will be the temptation to increase loan sizes because you just earn more per loan at a given interest or fee rate. So one of the questions we have is whether the amount of credit and the ease of that credit sort of move too quickly in one direction, and we should be careful to guard against that. I should add that the digital credit that excites me the most is stuff that people actually don't use to borrow very often. It's actually used in reserve for when I need it, for a rainy day, and a very small amount. So let's imagine the credit card in my back pocket where I have I don't owe that credit card company any money as I sit here and look at you today. But if I had to and I really needed in a pinch to make a payment, I could go out and make that payment tomorrow. So most of the time I'm not a borrower, but when I need it, I can actually draw on it quickly. That to me would be a hugely valuable service. But I have to stress, most people would not be borrowing most of the time. Quite aside from microfinance, we could talk about research, we could talk about bed nets, we could talk about healthcare. I think there is always a tendency for people on the delivery side, and I would include myself in this group, to be trained to be skeptical. We're not sure this is working. How do we improve it? That's been trained and built into everything that we do. We were trained to not to overbuy what we're trying to do. When you go to raise funding, or to write a blog as I do, you have a tendency to overstate or understate. It's a little bit like the press. I think when you're trying to attract attention or attract funding, you either want to say this is great or this is terrible, and I would also say that the researchers is just as guilty as the microfinance community in overstating the importance of their results. I would say the microcredit industry, there have been parts of it that have been guilty of overstating those results. Part of it is just the ebb and flow of implementation, fundraising, and I think the research community is as vulnerable on those accusations as any community.